So I said, okay, what can we do? Okay, let's just go for the physical. Get somebody who is tall, who is handsome, and please send this invitation so they can come. I hear he turned them down. Out of desperation, Josephine just said, please just send an invitation to Patrick Ayota. I know he will come. And the invitation came. I couldn't turn them down 5 times in a row. So I speak here, stand for you. Many of you are members of NSSF. And it's very important that actually now we talk about East Africa. This is just what the fund is as an East African institution. And Paul, you said something, I wanted to add something to your number. You said that over 200,000 investors within the Uganda Stock Exchange. Think of this, NSF represents 2.2 million members. So I hope you're not counting NSF as one investor, but the 2.2 million, so if we add that to the 200, that 2.4 million investors within the Uganda Stock Exchange. NSSF has invested about $1.6 billion in Kenya. We are the #1 non-Kenyan bondholder in Kenya, the #1 non-Kenyan stock holder in Kenya. And I'll tell you the implication of that. We have invested slightly about $700 million in Tanzania, both in the equities and the bond market. We've invested now, we are approaching around $50 million in Rwanda. And this makes us very interested in the dynamics of whichever is happening in that country. Right now, we are tracking Tanzania. The elections are coming on the 29th of October. What do the dynamics tell us? Do we need to be worried or not? Yesterday, as many of you know, may God rest his peace, Baba left us. And we spent the whole evening trying to read the mood of the Kenyans. What's the impact? There's a lot of anger, national anger about that, which is expected when people are in mourning. But we're trying to figure out, will that translate to something else, and what does that impact our own investments in Kenya? As you know, we're having a big election coming up in January in Uganda. What is strange in Uganda is this. If you go back in history, this time, over the last 15 years, our shilling has struggled, has actually struggled. This time, our shilling is strengthening against the dollar. What's happening to Uganda? We can't quite figure it out, but we know good things are coming along the way. And the reason why that's important to tell you is, with a local perception of our own markets, it matters. So in 2022-23, many of you know that the Kenya shilling depreciated against the dollar. I think it hit around 180 shillings to the dollar, from around 110. What did for us, it basically meant that we took foreign currency losses in our books, close to 1 trillion shillings in foreign currency losses. But we analyzed Kenya and spent the whole month of May and June 22 analyzing Kenya. And our conclusion was this: the fundamentals in Kenya were strong. So strong that we made a decision that we are going to buy more of the securities as they became available. Many of you that know that most of the non-East Africans who invested in Nairobi, whether it was in the bond market, whether it was in the stock exchange, decided to run out and sold their investments on the cheap. We bought it all. We bought bond yields with the yields of 17% dollars. And this was something. So our perception as an investor, and that's one thing that we do as is, when you look at East Africans, there's a lot of reliance. We think there's a lot of money out there that needs to come into East Africa. Maybe the #1 lesson is, how do we cultivate East Africans to invest in our own stock exchange? Because our perception of risk is very different from an East African when we begin to approach those things. Interestingly enough, our market is big, but the potential is untapped. How do we then tap into this market? And I'll go back a bit into history. For many of us who may just forget little things, May 17, 1792, about 250 years ago, 24 traders in New York City came together. They had been trading with each other in an informalized basis, and then signed an agreement, an MOU they called the Bretton Woods Agreement. they only had the initial trades were 5 securities, 3 government bonds, and the 2 bank stocks in 1792. Today, 250 years later, the New York Stock Exchange has listed over 2,100 companies with a capitalization of over $32 trillion. Don't worry about beginning humble or beginning small. 200 years later, you'll be the mighty exchange that all Africa comes to if they want to raise capital. And you can say, well, that was an exception. What happened to the other ones? In 1698, a gentleman called John Castings started just selling stocks in coffee houses in London, from coffee houses, and he sold little things. And there was something very common about these things. Sold it to willing buyers, willing sellers. They were there. In fact, necessity made them come for coffee because he began publishing whatever prices, good coffee prices, gold prices, and all these were interested in that. Today, the London Stock Exchange is 1,300 companies listed, boasting over 4.5 trillion pounds in capitalization. Humble beginnings, but the resilience, they stayed there and made it work. And maybe the key lesson for us here is, many times we've taken what New York say, what we've learned about them, London and so on, and we try to replicate it here, but without thinking about the struggles they went through, without thinking what they had to put up to make it work in that case. Pensions have been told a lot. I'm passionate about pension. So I want to demystify some things about pensions. They said, if only NSSF, if there were 2 NSSFs in Uganda, our capital markets would grow. How many have had that argument for liberalizations? That, we just need to have more NSSFs, and suddenly, our capital markets will grow. This is the data. The U.S. Social Security Fund, which is the basic Social Security Fund, the equivalent of NSSF, today is $2.72 trillion. By law, it can't invest in the New York Stock Exchange. And yet that has not prevented the New York Stock Exchange from growing. The London Stock Exchange, when you look at the number, in terms of ownership, the stocks, publicly listed stocks of the London Stock Exchange has now declined. The pension funds only own 2% of the listed stock in London. The non-participation or less participation of these pension funds has not stopped the London Stock Exchange from growing. Singapore Central Provident Fund. Singapore started their stock exchange in 1973 after breaking off from Malaysia. Today, Singapore Stock Exchange boasts slightly over 650 companies with a capitalization of over $600 billion. The CPF, which is their NSSF, has slightly over $300 billion. By law, they can't invest in the Singapore Stock Exchange directly. And yet, that has not prevented the Singapore Stock Exchange from growing. So when we look at our own country and say, okay, what has happened now? In the US, there's something that happened. The US pension fund scheme is layered. And many guys sometimes don't realize this. So on the baseline, what we call the base pension is the US Social Security. It's guaranteed. It basically provides safety for any of the retirees, the first level of safety. And that's why the law said they couldn't invest in the stock exchange. They only invest in one security, US Treasuries, because that's the only way the US government can guarantee that when you become eligible, you'll get your money. But beyond that, they layered individual retirement plans, company retirement plans, to the extent that if you look at the retirement assets of the US, they almost exceed $45